very good evening. I do hope that you're doing great, all of you. And I expect that all of you have done the homework questions that I gave you yesterday. Drumil, Lino, Twinkle, have you done it? Sumit, Akash, I think it's your first session today. Please report in the chat box, everyone. Okay, no worries. No worries. So just get yourself added, and I have already shared it in the group. Okay, that's good, Akash. Can you send me screenshot on my phone what answer you have written so we can discuss it right away? Twinkle, have you done it? No worries, we'll discuss it. Lino, have you done it? Those who have done it, please quickly send your answers to me on WhatsApp. I can read the answers and we can quickly discuss how is your answer. Okay, so I give you 5 minutes. Drop your answers to me on my personal message on WhatsApp. Okay. People, I'm receiving queries from almost all of you. Okay, many of you, in fact, regarding, ma'am, we had not taken taxes. Ma'am, we had not taken taxes in our F6 level or, in the skills level for any reasons. You got exemption. Generally, it is the main reason why, you know, you don't have taxes. So you got exemption in there. And other than that also, no issues, Okay, so there are questions asked to me. So I thought that let's keep it simple and I can do one thing. I have, since I teach F6 taxes also, so I've got my handwritten notes. I mean, they are curated notes, especially for F6 taxes. Then I'll share it across in the group with everyone in the group. Okay, so what I would refer it to your taxes, okay, to the tax notes that I'll be sharing for F6. So the best part and what it could help you is you would have your basic data with you because it covers every need to understand. It is there in the notes. So I'll repeat again. So what I was saying is that I teach F6 taxes also. So I have got my notes that I share with my students of F6. So I believe that I can share it with all of you in the WhatsApp group. So it is going to help you for getting in touch with the basics that many of you are not in touch. Reason being, you have taken exemption. So I think that can be done, and that would make your things and your understanding, a lot clearer. And I believe everybody can would be okay for it. Yeah. Please revert in the chat box. Twinkle, now I think I'm audible properly. And so I'll do that. Okay, I'll do that after the session. I'll share those notes because we would be needing those notes even today. We completed chapter 1 yesterday. I'm going to take up chapter 2 today. Okay, in chapter 2, we have to understand the calculation of taxes. That is basically covered in your F6 level, the skills level. We have already covered those taxes calculation procedure. So in ATX, let's quickly recap those steps. And the ones who are not very well aware with it, let me give you quick insights in the same. Fine. Good evening, Sagar. Sagar, yesterday you left early. Please do not leave early today. Be in the session for the full time. Okay? Okay, so I'm just sharing the screen and we are going to be beginning with the second chapter. In the meantime, please tell me any queries and doubts in the first chapter. Any questions and any queries that you have from the topics that we covered yesterday? Absolutely crystal clear, all of you. That's great. That's needed. Okay, people. So let's begin. So chapter 1, we have completed ethics tax avoidance schemes. Akash, I've received your answer. I would, comment on the same just in some time. Just give me a second. Yeah. Okay, now let's begin with chapter 2. Now I want your full attention here on my screen for chapter 2 because here it's just a recap of your income tax calculations that we have done in our F6 levels with few more additions. So I'll take up the basic concepts also that are done in F6. Okay. And of course, you need to put in more efforts to understand them now. Okay, so now this is a performer for income tax that is basically carry forwarded from income tax, your F6 from the taxes syllabus, it has been carried forwarded. So I'll let you know wherever there is some more understanding needed. Okay, a quick recap. We divide the income into 3 categories in taxes: non-savings, savings, and dividend income. As the name suggests, dividend income is the dividend received on the shares, okay, or dividend earned on the shares by the shareholders. Interest income is basically covered in the savings income. You earn interest from anywhere: interest on loans, interest on the savings bank accounts, interest on any kind of deposits. Any interest that you are earning would go in savings interest or savings income. The main category is non-savings income. That is, it will include all the other income which is not coming in savings and dividend. Am I clear? So whether it's an employment income, it's the property income, it is the business income, all these income will come under non-savings income. Fine. Now let's look at few examples like trading income. That's the business income that comes here in the non-savings income. Employment income will come here. Then in ATX, we have overseas income also added that we will see in the relevant chapters. Okay, the details of this income we will see in these relevant chapters which are mentioned here. So overseas property business income, again, it's a non-savings income as well as non-dividend income. It will come here. Interest from overseas securities. So any interest earned, like I said, would come under savings income. Dividend from overseas securities. Again, as we discussed, any dividend income would come under the dividend income category. Okay. Bank interest received, again, savings income. Interest on gilts and bonds will come under savings income. Now, question will be, ma'am, what is gilts? Gilts are all government securities. So there's government securities which are issued by the UK government. Okay, and okay, so any interest that you're earning on them would go in the savings income. Dividends received under dividend income. Discretionary trust income, we will cover this at the relevant time. Right now, I'm not going to go in detail of these, okay? Because for this, we need to study the entire background and the entire chapter. So discretionary trust income, we know that it is something non-savings. So we gross it up and we take up the gross portion here in the non-savings income. Interest in possession, trust income. Okay, so basically we gross a few portions. So interest in possession, trust income, that is from non-savings or savings, as the case may be, as it is given in the question and the data, we gross it up. That is why we are multiplying it by 100. Okay, so what is gross up and all, I will explain you at the relevant time. It will either be non-savings or it will be savings. Likewise, any interest in possession trust income that is coming from dividend income, which is a part of your dividend income, will come here. Once you categorize all the incomes, then you have to get the total of it, which we call as total income. So the next question comes in, ma'am, are these performers very important? They are. Remember, we discussed yesterday about the exam marks breaker. So there we have professional skills marks. The analysis and evaluation, professional skill marks, evaluation marks includes if your answer is written in the set format or. So this format is essential. Wherever we study, the format is very essential for you to answer the question, because that would be marked not just technically, but also with respect to the skills for which you have additional 5 marks, right? Per skill. So that will also be evaluated whether you have written your answer in the format or not. Fine. So the total of all this is named as total income. Now from total income, we reduce something which is called as qualifying interest. The question comes in, ma'am, what is qualifying interest? I will take that portion from the book now. Just write for the time being. Let's just go through the performer. I will explain you qualifying interest and then we will go into the calculation understanding of the question. Okay, the income tax calculation as well. So there is something called qualifying interest which is allowed as a reduction from income. There are situations when that interest would be a qualifying interest. I would just take it in another 5 minutes. Okay, now we reduce that qualifying interest and then we get net income before losses. And then we reduce losses and we get net income. From net income, we reduce personal allowance and we get taxable income. Now, this taxable income, we pay taxes. If you observe here, it is written here balance, balance, balance. Why? Because it is a chronological order that we follow. That means if we have qualifying interest, first we will adjust qualifying interest with the non-savings income. Then if non-savings income has become 0, because your income can never become negative, right? So we'll stop at 0. And after adjusting with non-savings income, even then also if we have any portion of qualifying interest remaining, then we go to savings income. We adjust savings income with that. Then again, if there is any balancing amount remaining of qualifying interest, then we adjust it with the dividend income. And then also if it is remaining, then it will lapse. You cannot carry forward. Same rule applies for losses. However, losses don't lapse. I mean, they are carry forwarded. So that rules and all, we'll understand the losses chapters. Got it? So a quick note, you will categorize all the incomes under the respective categories, non-savings, savings. Yeah, non-savings, savings and dividend income. And then you will get the total of them. You call it as total income. From that, you reduce qualifying interest in the sequence. First adjusted with NSI, then SI, and then DI. Clear? Absolutely. Then what you get is known as net income before losses. We adjust the losses and then we get net income. This net income is extremely important. important, people. At many places, we will use net income in the formulas, in the calculations. Okay, so we need net income to be understood thoroughly and properly. Okay, so now after net income, we reduce PA is an allowance given. There are few criteria that I'll take F6 notes to make you understand. Okay, and then we reduce PA and we get taxable income. Fine, on this taxable income, now the taxpayer will pay taxes. Are you clear with this basic understanding of the format? Because then I'll take it in detail. Any queries here? Okay, then let's proceed. Okay, as I said, let's discuss few points and then I will go into the calculation. First, let me take a qualifying interest. Okay. Few basics from the F6 taxes also. So I'll open my notes. Qualifying interest means what? Qualifying interest means the loans taken for qualifying purposes. Now the question is, ma'am, what are the loans taken for qualifying purpose? So what is the qualifying purpose? Qualifying purpose is number one, loans. For what? For buying the machineries or any other asset for business purposes. Just a moment. Yeah. So we are buying, we are taking loan. Okay. The loan is taken for what purpose? The loan is taken by either the employee or maybe the partner of a firm to purchase plant and machinery or other office equipments which are going to be used for business purposes only. Okay, like for example, the loan is taken to buy laptop for the office. So that is going to be used for business purposes only. Next question can be, ma'am, what if it is used for private purposes? Then in that case, we will proportionate the amount. We will only take the interest which is relating to the loans taken for the machinery which is used for business purposes only. If there is private use, question will mention it. Okay. So you will take only interest belonging to that portion of loan which is reused for private, which is used for business purposes. First thing is clear. Second thing, interest will be allowed for 3 years from the end of the tax year in which the loan was taken. Okay, so only for 3 years interest would be allowed starting from the tax year in which the loan was taken. I hope I'm clear. First point, I have it in notes. So I will be sharing these notes with you. Okay, I have it in notes. I will share these notes with you. Okay, next. What is the second qualifying purpose? This was first qualifying purpose. Okay, so in total, we have 3 major qualifying purpose, which is covered in your syllabus. Though there are some other also qualifying purposes, which are not covered in your syllabus. Number 2 qualifying purposes, when we are taken the loan for what? To purchase interest or in a partnership or an employee controlled company or a cooperative. Let me elaborate. Purchasing of an interest in partnership means investing capital. So we have taken a loan to invest capital in the partnership, or the loan is taken to buy shares in employee controlled company. Employee controlled company means what? Let's understand it. Employee controlled company is the company must be unquoted trading company. It should not be listed on a stock exchange and a resident in the UK with at least 50% of the voting rights held by the full-time employee or employees of the company. So if for a particular company, suppose there is one director, two director, and three, four people have jointly owning more than 50% of share capital of another company. Okay. So now if you are taking loan to buy shares of that company, that is called as employee controlled company. Okay. Or employee owned company. I hope I'm clear. So whether it's controlled by one employee or a group of employees, that's okay, but that should be more than 50%. Then only we will say control is there. Third one is if you want to take a loan to invest in a cooperative. Okay. So cooperative is basically when a few group of people, they come together to join, basically to create an association which is primarily serving their own purpose. That's called as a cooperative. Okay. And for generally we created for public also. Basically the purpose is to serve. That's cooperative societies. Okay. That is cooperative is with the cooperation of people coming together. I hope I'm clear. So the second point is when the loans are taken for either investing in a partnership firm, that is called as loan to buy interest in a partnership, or in an employee controlled company, or in a cooperative. So 2 points are clear. Absolutely. Third, when we have taken a loan to purchase ordinary shares, where to purchase ordinary share in a closed trading company. Closed trading company means what? Let me explain you that first. A closed trading company is a UK company which is controlled by 5 or fewer shareholders. That means maximum shareholders for that UK company is only 5 maximum. Got it? The persons claiming relief must either work for the company or should hold more than 5% of the company's share capital. So the person who wants to claim relief of the loan that he has taken should either be an employee of that company or should hold more than 5% of the share capital of that company. Then only we call it as a closed trading company. And then only the qualifying loan will be, called as a qualifying loan. It will become eligible. I repeat it again. So the third purpose is when we have to take a loan to purchase ordinary shares in a closed trading company. It includes companies which are resident in the EA, European Economic Area is created, consisting of some countries. So the companies which are resident in those, areas or those countries would be covered under this definition also, which would be closed if resident in the UK. Okay. So even if the company that we're talking about, if they're resident in UK, they would be covered under the closed company definition. Relief is not available if the enterprise investment scheme relief is claimed on the shares. I'll explain you what is enterprise investment scheme. But I'll just summarize before that these 3 points. First is when the loan is taken to purchase, plant and machinery for use in the business by partner or the employee, like laptop and all. But the purpose should be only to meet the business criteria, that is business purposes. If it is to be used for private purposes, then we have to, segregate the business purpose and the business portion and the private portion. And only for business portion, we will get the qualifying interest. Okay, next. Second purpose is when the loan is taken to purchase interest in a partnership or an employee controlled company. Remember I told you employee controlled company, which is an unquoted trading company and in which the employees together or alone, they hold more than 50% of the share capital of that company, or a loan to invest in a cooperative. Third is when a loan is taken to purchase ordinary shares in a closely held trading company. When we call a trading company to be a closed company, when the number of shareholders are up to 5 only, and it's a UK resident company. Got it? Now, relief is not available if enterprise investment scheme relief is already claimed on the share. So what is enterprise investment relief? Though we will be studying later when we study the reliefs. Okay, but just to give you a quick outlook, enterprise investment scheme is a government incentive that provides a valuable source of funding to the startup companies while offering tax benefit to the investors. So it's basically available to the startup companies. So it makes sense. Now, if you have already claimed one relief, you cannot claim on the same thing double relief. So then qualifying interest relief will not be available. If any of these three criteria are met, then the loan is a qualifying loan. Any interest paid on it is a qualifying interest. Am I clear? Absolutely. So these qualifying interest payments would be deductible in the income tax computation of the individual, but only for these three cases. Any doubts, any queries, please put up in the chat box. Guys, are you clear? Everyone, please revert. Sakash, Thrumil, Lino, Sagar, Sumit, Twinkle, any queries till this point? Good. You have to be crystal clear with it. Okay. Now I'll take a few more points that you need to understand that we'll cover from the basics. I'll look at the performer again. So now these breakups details you will see in the relevant chapters that I'm not taking now. But let's understand about now you are at this point, total income, we reduce qualifying interest. Now you know about qualifying interest, we have already discussed about it. Next is we get net income before losses. Again, losses will be taken up later on because for every different income, like a trading income, employment income, property income, and there are other incomes for which we have different losses, different kind of ways, different ways to treat the losses. So we'll study it relevant in the relevant chapters. Okay, then we get net income. Now, what do you see here? From net income, we have reduced PA. So the next question is, what is PA? PA is a personal allowance given to the individuals for every tax year. Okay, let me just take one basics. Do you know what is a tax year? When does it start? When does it end? Anyone? People, do you know what is a tax year? No. So let's first take that understanding. Now we have different years. Sometimes we have accounting year. Sometimes we have financial year. Yes. So you saw it, Drumit, and Sumit. That's okay. Let me explain you. So accounting year, we keep hearing financial years, we keep hearing calendar years. Tax year is a different year. Tax year runs from 6th April and it goes on till 5th April. Suppose if I'm talking about tax year 2021-22, tax year 21-22 will start from 6th April 21 and will go on till 5th April 22. Okay. Yeah, so I hope I'm clear. It will start from 6th April 21 and it will end on 5th April 22. Now I'm saying, ma'am, why it's such a tricky tax year? Ask UK government. Ask HMRC why they have it. Okay. Yes. But the tax year is from 6th April till for the first year and goes on till 5th April of the second year. So please keep this in mind. How do we do calculations with respect to it? I will tell you once we are at that point. Okay. Okay, now I have to explain you few things. So please focus here. First thing is about PA. First thing is about PA. Now we know that few things would be given to you in your tax rates and allowances chart, as we discussed yesterday. First thing that would be given would be that for the tax year 22-23, the PA is 12,570. So that means 12,570 will be allowed to be reduced from net income for every taxpayer? No. Now here we have a, a kind of slab that is beyond which if your income is, you won't get PA. And some pro rata wise, it will get reduced. So keep listening to me for a minute. So now how do we calculate PA? I really want you to focus here. PA is 12,570, but there are few rules that says if your adjusted net income is more than 1 lakh, then in that case, PA will be reduced by 50%. It will be reduced by 50% of excess of ANI over 1 lakh. Now, the question is, ma'am, what is ANI? You know, net income. We have seen in the performer here, the net income. Take the total of net income, add all three. You will get total of net income. Now, from the total of net income, you would reduce two things. Gross amount of gifted donations and gross amount of personal pension contributions. Adding to it that what is gross gifted donations? Gifted donations means that, we donate to different charitable trusts, to the different charitable organizations. So what happens in UK when you're doing a donation? Suppose you're donating £100. You will not donate £100 entirely to the trust. It will not go like this. Donation would only be of 80 to the trust. 20 will go through HMRC. That means when you're donating, when you're making the payment, you will pay £80 to the trust and £20 you will pay to the HMRC. And then HMRC will transfer this to the trust as a refund. Are you getting it? Just like we have TDS and all concepts, same concepts. Okay. So exactly what you're making payment to the trust is 80. But from your pocket, how much went? 100. So when you are reducing from net income, I will not reduce what amount I've actually paid to the trust, but how much the total value went in. And the ratio of 180 is fixed. That means every time you make payment, you will pay 80 and 20 will be transferred through HMRC. That means that when I'm taking net income from when I'm calculating adjusted net income, from the total of net income, I will reduce gross amount of gift aid donations. Because sometimes question will say that the donations made to the trust is 800. So then you cannot reduce 800, right? You will reduce the gross amount of it. What will be the gross amount? 1000. So you will reduce 1000 from it. Am I clear? Okay. Second, that you're going to reduce is gross personal pension contributions. Now, ma'am, what is it? Personal pension contributions. So in UK, we have schemes wherein, suppose I'm not an employee, okay, I'm a self-employed person, but I want to secure my future. So I want to contribute to pension schemes. Can I contribute? Yes, I can. So when you're contributing to the pension schemes on your own, okay, that is on your personal level, we call it as personal pension contributions. So now again, when we make contributions to the pension schemes, we make net contributions. Again, we have to gross it up with the same ratio 180. Got it? So again, you are going to reduce the gross amount of the personal pension contributions. Fine. So from the net income, I will reduce two things: gross gifted donations and gross personal pension contributions. When I reduce these two things, I get adjusted net income. And now I will check adjusted net income is below 1 lakh or more than 1 lakh. If it is more than 1 lakh, then I will take the excess over 1 lakh and multiply it by 50%. And whatever amount I get, I will reduce my PA by it. Are you clear? and that reduced PA will go in the calculation of my income. Okay, I just show you one example. Okay, let's take one example. Suppose my ANI is 125140 ANI. So what is the excess? I will, yes. That's correct. You will gross it up, Rumel. Okay, now quickly, guys. So let's take few examples. Remember, PA will never become negative. It will always be reduced to 0, but not below it. Never in your income calculations, anything will become negative. They will always be reduced to 0. Let's take 3 different examples to understand this. First, suppose your ANI is 125140. You will see the excess over 1 lakh. So excess over 1 lakh is, I will write here, ANI. I will share all these after the class. Don't worry, okay? No need to copy it. Excess over 1 lakh. Okay, then you will take 50% of the excess. Okay, so this is ANI. Excess over 1 lakh will be 25,140. And what is 50% of it? To 12,570. Now, how much is a PA allowed? 12,570. From this, I will have to reduce this. So what is your final PA? 0. That means no PA will be allowed to you. Let's take second example. Suppose if my ANI is 110,000. Now, what is the excess over 1 lakh? 10,000. Okay. What is the 50% of excess? 5,000. Why no PA is allowed? Twinkle. What is the PA which is allowed to you normally? 12,570. Yes or no? Tell me. Yes. When I did this calculation of ANI, I got my excess over 1 lakh is 25,140. What is 50% of it? 12,570. Are you clear till this point? Right? Now, what does the rule says? That PA will be reduced by 50% of excess ANI over 1 lakh. Will be reduced by this amount. So 50% of excess ANI over 1 lakh is 12,570. This figure would be reduced by this. So when I reduce from this figure, I'll get 0. That means no PA will be allowed. Am I clear? Good. Now the next one. 1,10,000 is my ANI. What is excess over 1 lakh? 10,000. 50% of it, 5,000. Now reduce your PA by 5,000. So how much is the PA allowed? 57570. Now does it give you clarity? Twinkle, Akash, everyone, Rumil, Lino, Sagar, Sumit. Now let's take another example. Lino, dear, I really want you to be in an area where there's network. Okay, so that you don't miss out on things. Please be in that network zone. Next, let's take another example where my ANI is 150,000. What is excess over 1 lakh? 50,000. What is 50% of it? 25,000. But boss, my PA is only 12,570. If I reduce 25,000 from it, my answer would be negative. But just now I've told you, you cannot have negative values. So you will reduce it to 0. That means now your PA will be 0. Am I absolutely crystal clear with it, the PA concept? Any doubts and questions? Please put up in the chat box. Okay. Let's go to the next one now. So now we know about PA, right? We will do the calculations. We will see the total of net income. ANI is net income minus Sagar. net income minus, you minus two things, okay? Net income minus gross gifted donations and minus gross personal pension contributions. Only these two things you reduce. Now, once you know your PA, you will adjust it here. Again, in the same sequence. First, you will adjust PA with NSI, then SI, then DI in the same sequence. Once you adjust it, then you get your taxable income. Now comes the calculations of taxes. So let me just take you to that point. These are the tax rate bands which are going to be given to you in your exam. You don't have to mug them up. Okay. The rate of taxes is depending upon what kind of taxpayer you are. If you are a basic rate band taxpayer, then you'll just have one tax liability, that is at 20%. Okay. And 20% would be the minimum taxes. There is no minimum capping that up to 2 lakh it is exempt. There is no exemption. Even if you earn £1, you have to pay tax. It's that. Okay. So basic rate band, if you are a basic rate category taxpayer, then the tax liability applicable is 20%. If you are a higher rate category taxpayer, then you will be paying taxes at 20% and then on higher income at 40%. If you are additional rate taxpayer, then you will pay taxes on first at 20%, then the next slab 40%, and then the higher slab of 45%. Now, how do I know the slab rates? What are the slabs? The slabs are that first, the income earned, and which income we say taxable income. If your total taxable income, you will add all three taxable income, okay? NSI, SI, and DI, all three you will add. If the total of taxable income is up to 37,700, then you are a basic rate taxpayer. If the total of the taxable income is beyond 37,700, but up to 150,000, that is 1,50,000, then you are a higher rate taxpayer. But if your total of taxable income is beyond 1,50,000 also, then you are an additional rate taxpayer. Do example to understand this. Okay, I'm just taking to the basics first. So again, I repeat, there are three categories of taxpayers: basic rate, higher rate, and additional rate. Basic rate taxpayer is a taxpayer who's got income, total of taxable income up to 37,700. Higher rate is a taxpayer whose total of taxable income is more than 37,700 and up till 1,50,000. Additional rate taxpayer is a taxpayer whose total of taxable income is beyond 150,000. Got it? First step. Second, NSI and SI, the same rates are there, 20, 40, 45. For dividend income, the rates are different. Dividend income for the taxpayer who's the basic rate, it is 8.75. The moment he goes into higher rate category, 33.75, and then it's 39.35. Do you need to remember them? No, they will be given to you in the exam. You just need to know how to apply them. That I'll teach you, don't worry. Okay, then are there any exemptions available, any benefits available? Yes, there are. And we call them as nil rate bands. So what are the benefits? First, if you are a savings income, if you have, then precisely there are some nil rate bands available. First nil rate band is the starting nil rate band. What is a starting nil rate band? You will see the income of savings and you will see if there is any income before savings. That means if there is any NSI income also of the taxpayer. Let's take one example to understand it. So I'm just giving you one small example to understand it, a very basic example. Okay, so let's take that example. So suppose this is the case where I have a savings income of 7,000 and I have NSI income of 2,000. First nil rate band which is applicable is starting nil rate band. That means you will see the income earned before savings income. What is the income earned before savings income? 2,000. There is a starting nil rate band of 5,000 available. That says, please see the income earned before savings income. Now, this income, please reduce from 5,000. So, income earned before savings income is 2,000. Reduce it from 5,000. How much is remaining? 3,000. Now, 3,000 on 3,000 of savings income, you will have zero taxes. That means it will be a starting nil rate band, we call it. Again, I repeat. So we have a starting nil rate band concept. Nil rate band means on this portion of income, you will pay zero taxes. It is not exempted, but you will pay zero taxes on it. First, there is no nil rate band for non-savings income. No nil rate band. Nil rate band starts for savings income. Savings income, first nil rate band is starting nil rate band. That says, please see the taxable income before savings income. Here it is 2,000. Then you reduce this from 5,000. So then the remaining is how much? 3,000. The 3,000 will be nil rate band for savings income. That means 7,000 minus 3,000. On only 4,000 you will pay taxes. For 3,000 you will not pay any taxes. Let's take another example. What if we don't have any NSI and we just have savings income? Then in that case, full 5,000 is available as a nil rate band because there is no income before it. So full 5,000 is available and we will pay taxes on only the remaining 3,000. Then the next one, suppose if your non-savings income is more than 5,000. Now, no starting nil rate band is available because it is already crossed 5,000. So you will not get any starting nil rate band. This is one benefit with savings income, that is starting nil rate band of 5,000. Again, you don't need to memorize it. This would be given to you in your exam. Second nil rate band with savings income is depending upon the type of category taxpayer you are. If you are a basic rate category, then straight away 1,000 will be nil rate band. 1,000 of the savings income will be nil rate band. Straight away. Of course, if your savings income is below it, then you will take the lower figure. But maximum 1,000 will be nil rate band. So your question will be, ma'am, is it in addition to the starting nil rate band? Yes, there are two nil rate bands available. So taxpayer can claim both starting as well as the nil rate band, savings nil rate band. Okay, starting nil rate band is at 5,000 nil rate band. And savings nil rate band is, if you are a basic rate taxpayer, you will get 1,000 as the nil rate band for savings income. If you are a higher rate taxpayer, then you will get 500 as the nil rate band for savings income. If you are additional rate taxpayer, you will not get any nil rate band. No, because the government says, boss, you're already rich. Why do you need nil rate bands? No nil rate bands will be given to you. Clear? Again, I repeat, so there are two nil rate bands available for savings income. First, the starting nil rate band. The 0% savings starting rate applies to the savings income only for the first 5,000 of the taxable income. First 5,000 of the taxable income. It's a 0% starting nil rate band. And then specifically one more nil rate band is there. The savings income nil rate band is pound 1,000 for basic rate taxpayers, 500 for higher rate taxpayers, and 0 for additional rate taxpayers. Third, what is the nil rate band available for dividend income? So whether you are any category taxpayer doesn't matter, to everyone universally up to 2,000, that is a nil rate band of 2,000 is available for all taxpayers. Basic rate, additional rate, higher rate, any taxpayer you are, if you have dividend income, you will straight away get 2,000 nil rate band. Okay, and you will be paying taxes only on the remaining dividend income at these special rates. Next, and the last point. These bands that we have, no, 37,700, 150,000, these two rate bands can get extended. That means you will continue to be a basic rate taxpayer, even for a higher amount, more than 37,700. You'll say, how ma'am? You remember I talked about that personal pension contribution? So the gross personal pension contribution will extend the rate band. I again repeat, Your rate bands will be extended by the gross amount of personal pension contribution. Extended means, suppose my gross personal pension contribution is 6,000, then 37,700 plus 6,000, 43,700. That means up to 43,700, we will have 20% taxes only. And the same will extend the 150,000 nil rate band also. So now 150,000 will also be added by 6,000, and the nil rate band and the higher rate band will be till 1,56,000. So, okay, because it is given in the taxes. It is given in the taxes, Dhrumil, that when there is a nil rate, whenever there is a gross personal pension contribution, it will do two things. It will reduce your NI so that you can calculate ANI for personal allowances calculation. And it will also extend the rate band. Basic rate band and higher rate band, both will be extended at the same time by the gross amount. This is to give benefit. No, it is an additional benefit given to the taxpayers. That's all. I had given this here also as a note. I will definitely be giving to you in the notes also. I will be explaining you through an example. Don't worry, Twinkle. I'll just summarize everything again, and then I'll take one example to make you understand it. Okay? And then I'll be sharing the notes with all of you by tomorrow first half. For chapter 1 and chapter 2, I will combine some notes and I will send it to you. Okay. Let me just summarize everything here again. I'll take the performer, I'll summarize, and then I'll work out one question to make you understand it better. Okay, so now we have non-savings and savings and dividend. We divide our income into these three categories. Okay, trading, all the interest related income will come here. All the dividend income will come here, whether the UK income or the overseas income. You will club everything, you will add them together, then you will get total income. From total income, you will reduce qualifying interest for the three purposes as we have discussed. Then when you reduce it, you will get your net income before losses. We reduce losses and we get net income. Okay. Yeah. Now we reduce the net income. From net income, we will reduce personal allowance. Fine. So you will take the total of net income and you will reduce two things from it. Gross personal pension contribution and gross gifted donations. Just remember, you will only do this activity on net income also seems more than 1 lakh, because the reduction of P is only applicable when it goes beyond 1 lakh. Clear? So now if it is going beyond 1 lakh, then you will add the total of net income. From this, you will reduce two things: gross gifted donations, gross personal pension contributions. When you reduce them, you will see the ANI that you have received, and you will take the ANI excess, the excess over 1 lakh, take 50% of that excess and reduce your PA by that 50%. Remember, maximum your PA will be reduced to 0, but will never become negative. Now, PA will also be adjusted here in the same sequence: NSI, SI, DI. PA is 12,570 maximum given to you in your tax rates and allowances chart. Then you are a taxable income. Now add the three taxable incomes and see the total, just to establish which category taxpayer you are. If you're a basic rate category, then the maximum tax rate that will be applicable would be 20%. For SI and NSI income. For dividend income, the separate rate will go. Okay, and again, if you are a higher rate taxpayer, then the maximum tax rate that would be applied would be 40%. And likewise, if you are an additional rate taxpayer, maximum tax rate that would be applied would be 45%. However, there are different rates for dividend income. Now, then we will calculate taxes. First, we will calculate the tax on NSI income, then SI income, and then DI. When we calculate the taxes on SI income, we will see the two nil rate bands. The starting nil rate band of 5,000 and the nil rate band applicable to the type of category taxpayer you are. If you are a basic rate category taxpayer, 1,000 will be nil rate band. If you are a higher rate category taxpayer, then 500 would be nil rate band. Absolutely clear till this point? Fine. Then you go to DI income and your nil rate band is 2,000 for any category taxpayer you are. Then you will apply the taxes. Once you calculate taxes, we go into the pensions chapter. That time we will understand there is an annual allowance also, annual allowance charge also applicable. Okay, so though we have covered this in taxes, but still I'll repeat them in ATX also. Okay, so the annual allowance charge will be calculated and will be added here. So anything that increases your tax liability will be added here. But at the same time, there are few factors that reduce our liability also, like marriage allowances, okay, like your EIS, as we had discussed here, the investment schemes, and your property, business income, finance cost. In the relevant chapters, we will calculate them. Oh, just give me a moment. Yeah. Okay, so we'll see them in the relevant chapters. So these are called as tax reducers. That is, those schemes that help you reduce your tax liability. Fine, we reduce them. Then the DTR rules we will study in the chapter 9 and we'll reduce. That is also tax reducer. Okay, so we'll reduce it from here. And then we get our income tax liability. From income tax liability, if there is any pay is like tax deducted at source. We have TES, which we call as pay in UK. Pay as you earn, we call it. If there is any tax credits, any interest, these all portions, as we study gradually, these are all benefits. I mean, these are all taxes paid by you already in advance. So in that case, either through you or through any other route, indirectly, like through employer or any other route, if these taxes are paid by you, then this would be adjusted in your income tax liability. And finally, the net liability that is remaining is only the income tax payable by you. Right now, we'll do a simple competition question to make you understand with the basics of calculating taxes. Fine? And then I'll also try to give you one question where you will do calculations. So that will give you more confidence. Okay, let's do one question. Okay. We have in essential reading, there are more details as that ones that I've already discussed with you. That is all given in your essential reading chapter 2 also. I'll cover this portion once we do the income tax competition. I will cover this portion. Okay, just one point. If their assets are jointly owned by the spouses or the civil partners are the ones who are not married, but they're living together as a live-in relationship. That's allowed. And that is registered in UK. So you need to be registered. You need to register your civil partnership in that case. So in case of civil partners or spouses, if the assets are jointly owned by them, unless and until a percentage is specified in the question, you will assume it is 50-50. So any income earned on that asset would also be 50-50. Okay. We'll study this even more in the tax planning chapter. Okay, let's do one question. Holly receives 1 lakh salary each year. Pay is 27,500. It is given to you that the tax deducted at source was 27,500. That is going to reduce my income tax liability. Clear, guys? She also received 6,000 dividend income and 12,500 bank deposit interest in 2022-23. Her expenses for the year included a qualifying interest payment of 2,000 and she pays 12,000 into her personal pension plan. So now it is given to you that the personal pension is 12,000. Now we have to see whether it's a gross amount or a net amount. Though Drumel, I already answered your question, so it should be clear. But when she's paying means it's a net amount. So we need to make it gross. Okay. Now let's do this calculation and calculate the tax payable. The heading income tax payable for 22-23 of Holly. So we are doing this is activity 1. Income tax computation for Holly for tax year 2022-23. Okay, first let's categorize our income. So we have 3 categories: non-savings income, savings income, dividend income, and there's no total needed. Generally, we have these 3 categories. We'll mention it with the pound. So I'll insert pound here. Now let's go to the first head. First income is salary income or employment income, we call it. Okay, employment income will go where, dear? It will go in NSI, right? So we'll put it under NSI 1 lakh. Next is there is a bank deposit interest and dividend income. So I'll write here bank deposit interest. And there is a dividend income. Okay, bank deposit interest is 12,500. And dividend income is 6,000 given to you, right? 6,000 is given to you. Any other income? No, there is no other income. I'll add it. When we add it, what we get? Total income. From total income, we will reduce qualifying interest. Okay, what is qualifying interest given to you? 2,000. So you will first adjust it against NSI, and only if it is insufficient NSI income, then only you will adjust it against salary income and then dividend. 2,000 is fully getting adjusted here, so I'll not take it against any other income. Okay, now here, when you reduce it, you get net income. There are no losses, so I'll net income before losses. Reduce it. Now I will reduce PA, personal loss. For that, I would need to do working. Why? Because first, when I take a total here, it is beyond 1 lakh. That means it gives me an idea that there can be reduction of PA. So I'll do a working note here. And I will calculate PA abatement. Abatement is reduction. Okay, so what is PA abatement here? calculate ANI first. So adjusted net income will be equal to, I'll write the details here. What is net income? Get the total. 116,500. Okay. Then we will write here gross pension contribution. Okay, now it is given here 12,000. So 12,000 she's paying. That means it is a net amount. We need to gross it up. So how we will gross it up? 12,000 multiplied by 100 divided by 80. This is a universal. Okay, this is a fixed ratio that we take for grossing up. It will never change. Fine. Now you reduce it. You reduce it and you will get adjusted net income. So adjusted net income is this minus this. Fine. Now take excess over 1 lakh. Okay, and then take 50% of excess. Okay, now we have got 50% of excess. That means my PA will be reduced by 750. So I will write here what will be abated PA. Abated PA will be 12,570 less 750. Are you clear? So I'll reduce 11820 from here. Now, when you reduce it, you get your taxable income. Fine, add the taxable income because we will establish the category. 104680, this means that it's a higher rate taxpayer, right? We will be covered in higher rate band because it is beyond 37,700 and below 1,50,000. But just when you note that you have a gross pension contribution, your basic rate band will also be extended. So second would be extension of rate bands. Okay. So your basic extended, I will write here, extended basic rate band will be an extended higher rate band. It is not needed, still I'm writing it so that you are clear with this concept. Your normal basic rate band is 37,700 plus you will add the gross amount of pension, 15,000. So basic rate band now becomes 52,700 and the higher rate band will be 150,000 plus 15,000, 165,000. So definitely we are in HRB category only. Now let's do the income tax calculation. First, I will take NSI. You always do, group wise calculation. Since our BRB is still 52,700 and NSI is more than that. So I will take here from 0 to 52,700. On this income, we will pay tax at 20%. So I'll write 52,700 multiplied by 20%. Now we have how much income remaining? 86,180 less 52,700, right? On this portion, we would be taxed, the income would be taxed at 40%. Because now the basic rate band is over. You can see here 52,700 is over. Now you're not left with any portion of basic rate band. So on the additional income, it will be taxed at 40%. That is 86,180. I can link it. 86,180 less 52,700 multiplied by 40%. So the tax would be 13392. Okay. This is for NSI. Now let's go to SI. Now, boss, we have two nil rate bands applicable for SI. First is the 5,000 starting nil rate band. Please see here. Is the 5,000 starting nil rate band applicable? No, because NSI is much beyond 5,000. So we don't have 5,000 starting nil rate band applicable. Now, the category of the taxpayer is HRB. So we know that if the taxpayer is higher rate band taxpayer, then 500 is up. The initial 500 is covered in the nil rate band. Correct? So for SI, I will write here 500 will be covered at 0%. If it is needed, I can write in brackets NRB. This is the nil rate band. Because the taxpayer is a higher rate category, so simple, you will do in the calculations. In your exam, you're required to do 500 multiplied by 0%. Okay, now the remaining savings income will be taxed at higher rate because basic rate band is over. So how much is the remaining savings income? 12,500 less 500. 500 is already covered in 0%. So only 12,000 is remaining. That will be taxed at 40%. So I'll take it here. 12,500 less 500 multiplied by 40%. Fine, savings income is over. Now let's go to dividend income. Dividend income, any category of taxpayer will get 2,000 nil rate band. So I will write here 2,000 in brackets NRB and it will be taxed at 0%. So I will take 2,000 multiplied by 0%. Now what is the additional dividend income? Total is 6,000. So it will be 6,000 less 2,000. That will be covered at 40%. Will it be? No, we have a different rate for dividend. Okay, do I need to mug it up? No, because that rates would be given to me. I'm showing you from here. So HRB, it is covered for 33.75% because the category of the taxpayer is already higher rate band. So now higher rate band would be applicable, that is 33.75. Okay. So the rate that cable would it is a liability that you are calculated. Allowance charges, if there's any pay, you will reduce it to get the final tax paid. I will add it. So I get my total tax liabilities 30,083. Now from this, the question says there is a pay. Pay is like TDS. I will reduce it. So I will reduce pay. How much? 27,500. Okay. When you reduce it, now you get your tax paid. So income tax payable is 258. Please tell me till this point any queries, any doubts. Now are you able to understand everything all together, the basics? Twinkle, are you able to understand now? Akash, Lino, Sagar, Sumit, everyone. I think we can work out one question. Just allow me a moment. I'll see in essential reading there is a question. I'll explain it. Don't. These all I would want you to go through. These are the basics that are carried from the saving, the tax syllabus. I believe all of you have access to the books now, right? So please get these. Okay, I'll take up the rate bands calculation, then I'll take a few more portions from here, right? That you need to know. I'll explain from here. Yeah. So coming to the extended rate bands, Akash, the concept is that your rate bands existing, the normal rate bands are 37,700 and 150,000. You know that? Yes. Now, whenever there is an investment in the personal pension schemes, personal pension, so the gross amount of the personal pension contribution will extend the rate band. It will push it. Now you don't have to pay 20% till 37,700 of your income only. You will pay 20% taxes till 52,700 of your income. How? 37,700 plus the gross amount is 15,000. You will add it, and by this it gets extended. Am I clear? Now, so both rate bands get extended. That means you are paying 20% taxes till the taxable income of 52,700. And you are paying 40% taxes till the taxable income of 165,000. So you got additional 15,000 benefit. Clear? Okay, now a few more points. You know your tax here. We have discussed that. This is the types of income. Now, there are few incomes which are exempt from taxes. That means they are not going to be included in your income tax computation. They are completely exempt. They're excluded from income tax computation. Which are those income? Number one, income from national savings certificates. Okay, like in India also we have NSC incomes. Though NSC income is not exempt in India, but it is exempt in UK. Then statutory redundancy money. What is statutory redundancy money? Let me just explain you. It is like when we fire the employee. Okay, then in that case, as per the government rule, we have to give him some money, right? Some extra money we have to give him for making him redundant. That is, now he's out of job. So because of the firing, he's out of job. So this amount which is given to him, which is within the statutory limits, would be exempt, would not be covered in any taxes. Because that's basically on account that he's already facing the hardships of not being employed, then we should not give him more hardships. Winnings from lotteries, they are exempt. Scholarships, exempt. Okay, now winnings also include winning from bond prizes. I'll just explain you. It is not the simple winnings. Basically, these are premium bond winnings. So what are premium bond winnings? And UK government issues a lottery bond, okay, by the UK National Savings and Investment Agency. These bonds are entered into regular prize draws weekly. So if you win the prize, that is exempt. Which ones? Premium bond winnings, which is issued by UK government. They become exempt. Scholarships for studies, they're exempt. The social security benefits like child benefit, if you're aware, UK government also gives an amount to the parents of the children, okay, that is for the maintenance of their child, okay, or their children. So that is given as a child benefit amount, which is exempt in the hands of parents. But we will study that there is a child benefit charge if the parent's income is higher, then it becomes taxable. Okay, interest on damages for personal injuries, exempt, like accidental and all. Income from investments made through ISA, they are exempt. If you are aware of what is ISA, it's okay. If you're not, I'll explain you. What is ISA? Please look here. I'll again take these notes help. So ISAs are basically the special savings accounts which are provided by the UK government in order to promote and boost savings by individuals. Okay, these are special savings accounts. Why they are special? Because if you invest in them, then interest that you earn on them is completely exempt. It will not be taxed. Is there any capping on the amount of investment? Yes. Yes, I'm going to give you a question. Don't worry. I'll take question from F6 also if it is needed. Fine, I'll give you that. I'm just giving you a few concepts. See, these are all F6 concepts. But I don't want to keep it plain for you, so I'm just making you understand these. I'm going to share these notes also with you in a more proper way for your ATX that is relevant. Okay, so I'm just making you brush up with these concepts so that when you read it, you don't feel yourself alien. Okay, you feel connected. I hope everybody is following what I'm saying. Anybody facing any questions, any concerns, any queries, please put them in the chat box. Comfortable so far? Everything is going inside the brains and not going over it? Great. Okay. So I hope it is not that boring, guys. Taxes are interesting. Okay, let's go quickly into it. So we have these individual savings account that we call in short as ISAs. So what are ISAs? These are the special savings accounts which are provided by UK government in order to promote and boost savings by individuals. The benefits are that savings interest and any dividend income that we earn here is exempt. Any interest on investments that are made through ISA exempt. Chargeable gains on the sale of investments exempt. Everything is exempt. There are two types of ISAs. One is a cash ISA, another is shares and securities ISAs. Cash ISA is just like your savings account that we have in a bank. Okay. Shares and stock ISA is just like your demat account that you're giving money to the bank and now they are investing in some portfolios. So you'll have shares in your account for that amount. Okay. Now, the capping annually is that annually you can make an investment of only up to £20,000 per tax year in an ISA combinedly for cash and shares and stock ISA combined. It will be only up to pound 20,000. What if it is beyond 40,000 pounds? First, these ISA accounts practically will not allow because they have a capping of 20,000. If it goes beyond that, then of course, any income earned on deposits beyond 20,000 will be exempt, will be taxable. So only up to 20,000 if you're investing every year, then any interest earned, any dividend earned, any capital gains, any kind of income that you're having is going to be exempt. So it's a very, very good way of encouraging the savings among individuals. Clear? So I'm taking it here. Now I hope you know income from investments made through ISAs are exempt, provided they are in the capping of 20,000. Now we know about PAs. We have discussed it. Okay, I'm giving you a small question. I need you to calculate the tax liability. The question is in front of you. No hints from my side. You have to give me what is the total tax liability. everyone answers? I'll show you. Good. Okay, wait, I'll take you. I'll tell you from here only. I'll update it. I'm updating from here, okay? 8.75% is the basic rate, 33.75% is the higher rate, and 39.35% is the additional rate. Okay? We'll just discuss it. Let everybody answer. Sumit has given me answer. Others, go quickly give me your answers. Twinkle, I hope you got your answer. These are the three rates. Everyone also, I mean, for everyone, this is shared. Type it, type it. Come on, everyone. We have to increase our speed now. We'll check it. Okay, giving another 1 minute, not beyond that. Fine, let's discuss the answer. Lino, any answer coming from you? Okay, let's discuss the answer. So the correct answer is, let's verify. No worries, Lino. Did you all get this correct? Nobody got 965. Did you give savings nil rate band? Nobody gave starting nil rate band of 5,000. That's okay. This is how you're going to learn, right? So we'll get here net income is 31,600. All of you missed it. You gave, but then also you missed it. Let's see where. 31,600. PA is 12,570, which will be fully reduced because it is not beyond 1 lakh. So there is no abatement of PA. When you reduce it fully, you get NSI as 0. Drumil, did you get it? Did anyone get this taxable income of 19,100? So Drumil, Lino, Twinkle, Akash, Sumit, Sagar, no one? Why you deducted 20%? You don't need to deduct, no? Because it is not beyond 1 lakh, boss. It is 31,600. So you just have to reduce P in full. Not a problem. Twinkle, Akash, are you clear now? Sumit, are you clear now? You're with your error that you all forgot to reduce probably the personal allowance and you did not get this figure. So you will get your NSI 0, your SI 6,000 and DI 13,030. No worries. I'll send you more questions for practice, okay? Okay, why we bifurcated? I'll give you the understanding. Just a moment. Yeah. I'll give you that understanding of that why we bifurcated into it. Okay. I did not cover this point. Yeah. I did not cover this point. So I should have covered it before giving this question. Maximize the tax saved. So if a taxpayer with low NSI had some personal allowances left, then it would be beneficial to offset this. It is beneficial to offset this against the dividend income in priority to the savings income. If the savings income would already be covered by the savings nil rate band and the starting band, then the dividends exceed the dividend nil rate band. What does it mean? Yeah, I just covered this point and just somehow got skipped by me to cover it. Let's look here. When your savings income, if you look at, your 5,000 is the starting nil rate band is applicable, and 1,000, since the person is a basic rate taxpayer, will be given. 6,000 benefits would be given to the savings income. So now here, this is a difference between tax and ATX. Okay, in taxes, you don't cover this point in skills level. In ATX, we cover it. So this point says that look at the savings income 8,500. How much you can potentially save from the savings income with the help of nil rate bands? 6,000. So how much of the savings income cannot be saved with the nil rate bands? 2,500. So by this logic, we will adjust PA only by 2,500 and the balance PA remaining will be fully adjusted with DI. Okay, so I will just edit a bit sequencing of PA. The sequence is same, NSI, SI, DI, but there is a star clause. Star clause says that in the cases where your SI is covered in the nil rate band, okay, where your SI, first use your PA fully against NSI, fully. Once your NSI is over, then the question is where should I adjust it, with SI or with DI? Ideally, dividend income has got higher tax rates when you compare it for the, the basic rate band and the higher rate band, especially the basic rate band. The basic rate band is higher tax rate in dividend income as compared to the other incomes. You don't get that nil rate bands other than 2,000. In savings, we still have a scope of getting 5,000 plus 1,000, maximum 6,000 nil rate band. So this concept says that look at your savings income and see how much can be saved out of PA, out of the nil rate bands. Like here we established that we can save 6,000 out of the nil rate bands. So only 2,500 is left for which we don't have nil rate bands available. So what we will do, we will adjust a PA only for 2,500 in savings income. And the remaining PA which is left will be fully adjusted with dividend income. Am I clear now? Now does it give you clarity? So I skipped discussing it for ATX. Okay. So now if you look at the tax liability, this 6,000 will be fully adjusted with nil rate bands. And out of 13,030, 2,000 will be adjusted with the nil rate band, and only on balance 11,030 we will pay taxes at 8.75%. I'm doing it. doing it. So that is why I took this question to make you understand on all these balancing portions. Okay, first. So first point we have understood here is non. Second point, we will adjust the PA against savings income after understanding how much of the nil rate band is available, so that we are not wasting our PA on the savings income, which will otherwise be adjusted with the nil rate bands. Second, the third point. Now, whatever is remaining will be adjusted with the dividend. Now, the next important point that I'm going to take up, and even asked by Drumel also, the rounding off of taxable income. Okay, generally, this concept of rounding off is not taken in your taxes syllabus, F6. So when you're coming from F6 to ATX, this is a change again that you're observing. Now look here, 5,000, 8,500 and 1,800 we have taken here. We have adjusted our PF full, and now we are getting, if you observe here, if I reduce from 31,600, my PA of 12,570, how much I'm getting? I'll summarize all this in notes, so please don't write it. Okay, I would be giving you notes for the same. 31, the income was 31,600. From this, I will reduce 12,570. How much I'm getting? 19,030. The rule of income tax says that this taxable income, whatever you will take, will always be rounded off to the nearest 100, and it is going to be rounded off upwards. That is, here you are getting 19,030, so you'll make it 19,100. You'll not make it 19,000. It is always upward rounding off that you will do. Drumel, so am I clear with this? Are you all clear with these two new concepts that I've just added with the questions? Yeah. So now if I take up your last question that we were doing, I'm just going to edit it a bit now. Okay. I'm going to edit it a bit. Though your answer is correct as per the book, but let's edit it. What is the total of taxable income? If you see, it is 104680. Ideally, we should take it as 104700 and then do all the workings. Are you clear now? With PA, there was no question. The reason being, it was fully adjusted with NSI only. Okay, so you will take 104700 and then you will do the taxability. So that will give you a little bit varied answer. Okay, any questions? Any please put it in the chat box now. Practice. Just one thing of caution. I will be sending you some questions from your F6 skills level, just for the PA concept. So just pay attention when you're applying the PA rules. Apply the rules as we have discussed here. Fine? Yeah, anything that you have to ask from this chapter, please ask me. Can we proceed? Give me a reward, people. Clear? Crystal clear with the points? Anything that you have to ask that you're not clear with, please put up in the chat box. I will give you a break. Don't worry. I know you need a break. I will give you a break. But can I just cover one small portion and then I'll give you a break of this chapter only? Just the last topic for this chapter. The children one. See, for children, please remember, if the children are earning income on their own, like, they are a professional at the young age and they're earning income on their own. If that is the case, then their income will be taxed normally like we are doing for any other individual. They would be treated like a normal individual, and they will income would be taxed normally with the PAs, and every rule will be the same. However, if children are having income, no, 5,000 nil rate band is only based on the fact, Twinkle, that the income earned prior to it, which is NSI, should be less than 5,000. If it is less than 5,000, only then you will have a benefit of 5,000 nil rate band. Otherwise, it will not be there. Okay. So you will look at income before SI, and before SI, we have only NSI. So if NSI is 10,000, you get 4,000 nil rate band. Got it? So you will reduce NSI from 5,000, simply speaking. Okay, now just the last point for this chapter. Children, if they're capable of earning their income on their own, with their own talents, or it's because of their own hard work that they're earning the income, then it will be taxed normally like any other individual. However, if children are earning income out of, say, the deposits or any investments done out of the parents' money, that is what the parent has done, they have transferred funds to the parent in the children name. The transfer funds in children name, and then the income is earned on that fund. Now the question is how you're going to treat this income, because it was not on account of children own, it was out of funds that were transferred by parents. So just like in India, we have a clubbing provision. In UK taxes also, we will add this income now with the income of the parent. So it will be deemed as if it is parents' income only if the income amount received is beyond 100 pounds. I again repeat, income from a minor child, of course, these all rules apply to minor only. Income from a minor child, income earned by a minor child out of the funds which were transferred by the parent to the children. So then in that case, if that amount is beyond 100, that interest income is beyond 100, then it will be clubbed, it will be added to the income of the parent who transferred the fund. Okay? It will not be treated as the income of the child, it will be added to the income of the parent only. Because actually it is the parent's income only, no? Parent transferred the fund, and on that fund interest was earned. So the child did not do anything. He did not do any activity due to which he would be able to earn that income. So therefore, it will be earned in the income of the parent. Please understand, it is applicable only in case of parents and not grandparents. So if grandparent is transferring the fund to the child, then it will be included in the income of child. It will not be clubbed in the income of grandfather or grandmother. Only for parents, the clubbing rule applies. Okay. Now, this includes income from trust also, which is created by the parents for the child. So, any income earned by the trust will also be added to the income of the parent. I hope I'm clear with this. We will be covering these points even more detail when we go in chapter 6, tax planning. So, few more points also will be added over there. Okay. So, just for the time being, we have covered this theory. Practical, we will cover over there. Okay. I'll give you a 5 minutes break now. Now let's have, and we will do one skill checkpoint, which is the professional skill, which is marked in your exam. Yesterday, we had discussed about that the skills are also marked in your exam. One skill today we'll be covering. Skepticism. Okay, let's have a 5 minutes break. Fine. I'll take up your concept, Akash. I'll repeat again the 5,000 nil rate band, right? That is the point that you have a query in. Yes. There is no limit for NSI. This concept simply says that look at your NSI. Okay. Now, suppose I want to discuss this starting nil rate band. Now, just look at your NSI. If your NSI is, say, less than 5,000, whatever your NSI level is, just reduce it from 5,000. If you have anything remaining, that becomes a nil rate band for savings income. Like for example, if my NSI is 0, then the starting nil rate band available for savings will be 5,000 minus 0. Okay, if my NSI is say 1,000, then starting nil rate band available for SI to be adjusted savings income is 4,000. If my NSI is 2,000, then the adjusted net, the income which is adjusted, sorry, the starting nil rate band to be adjusted with savings income would be 3,000. Are you clear? So likewise, if I say my NSI becomes 5,000, and then the starting nil rate band to be adjusted with savings would be 0. If my NSI is say 15,000, is it beyond 5,000? Yes. Now can you have negative figure? No, so it will be 0. So if your NSI exceeds 5,000, no starting nil rate band is available. Starting nil rate band is only available till your NSI is less than 5,000. Am I clear now with this concept, Akash? Okay, great. Good. Now let's proceed and let's discuss this first skill checkpoint. Before even we move into this topic, you know that it is the first skill checkpoint which will be tested in both section A and section B. For that, first we need to understand what do you mean by skepticism. Do you have any idea, people? What do we mean by skepticism? What does it mean actually? Skepticism. Let's understand it. So let me give you a few meanings to it. Uh, yes, so you can say it is an art of questioning. So basically, it is an art of applying the judgment. Okay, so let me just give you a few meanings of it so that you understand first what do you have to do in this skill. So, what is skepticism? It means being alert to the information that brings into question the reliability of documents and responses to inquiries to be used as evidence. In another way, we can say it is the application of reasoned judgment to consider the relevant factors, decide which ones to prioritize, and then come to a suitable and justified conclusion based thereon. So, skepticism is first identifying which information is relevant for your answering and which information is not. Accordingly, you are going to use the relevant information given in the question in the most appropriate way to give the final answer. Okay? Examiner will get to know the way that you are answering, the way that you're using the data. If you're applying skepticism, that means you are applying a reasoned judgment. Okay? You would know which information is to be used, which is relevant for your answering, and which information is not. So the information which is relevant, you will use that in coming to the conclusion in the appropriate manner. Am I clear? That means professional skills will be reflected in your answering. You are not just using everything and anything which is given in your question. Only the information which is going to be useful to you for your answering for the questions, only that you are identifying. Okay, so that is skepticism. Let me go in detail of it. So just as I told you, skepticism is one of the 4 skills that have been introduced in the ATX syllabus from June 2023 onwards. These skills will be examined in section A of your exam as well as section B. Section A will test all these professional skills for 10 marks in total. Okay. Each section B will test the one of the skills for 5 marks. Please understand, section B skills will cover from analysis, evaluation, skepticism, and commercial acumen. Only out of these four, 2 will be tested. Okay, no professional skill, whether in section A or B, will be more than tested for more than 5 marks. So that is why I said in section A, generally 2 skills are tested. In section B, each question, one skill will be tested. Okay. Please understand. Your skills are not asked separately. They are evaluated by the examiner by the way that you are answering. Okay, now how to score marks for skepticism will depend upon the nature of questions. I really want to take few points from this information which is shared by ACCA. Because now on, when you are answering the questions, whatever skills we cover, you will be showing those skills in your answering also. I would be guiding you for sure, but the skills should be reflected in your answering. Okay, first, when we apply skepticism, effective challenge and critical assessment of information and assumptions will be needed. Okay, it is not that every information given in the question is needed. Please understand. You will critically assess it. Okay, that whether it is needed or not, and to what extent you are going to use that information. Information and assumptions provided in a question may sometimes be subject to challenge. However, to score a professional mark, you cannot simply say that a piece of information may be wrong. Instead, you should explain why this information or assumption may be subject to error and the impact of the information or assumption being unreliable. Sometimes some assumptions, some information given in the question may not be correct, intentionally by the examiner. It is set like that, where you will be identifying the information and the assumptions which are wrong to this scenario. You have to identify it and you have to highlight to the examiner that yes, you have applied your skill and you know it. Then only you'll get 1 mark for your skills. So accordingly, the marks are bifurcated throughout that section A and section B, that how these skills mark will be gained by the individual or the student. Okay. For example, we often see a question where we are reviewing an inexperienced person's work for errors. In every subject, generally, we have these kind of questions. So when you're identifying that, okay, this is an error done by the accountant, you just don't have to highlight that this is the error. You have to also highlight why is this an error? Or why is this correct for both things? When it is not an error, then also you have to give a reason why it is not wrong and why it is wrong both ways. And then you have to give the corrective action also, that what is the correct way. Okay, so all this will be covered in this skill. Okay, then the next portion covered in skepticism is identification of missing or additional information which may alter the decision reached. Sometimes in the question, you may feel that useful information has not been provided. And if you so can mention this to score marks for skepticism. This is again another area. If you find some missing links, some missing information, some incomplete information, then you are going to comment it in your answer, in your notes, in the answer, that look, this information is missing. If this information was there, then we would have arrived at this answer. For example, a question may not contain sufficient information for you to able to determine that whether the relief is available or not. If I talk about any particular relief, okay, in the chargeable gains, we understand there are a lot of reliefs which are there. So suppose for applying one relief, you need some more additional data which is not available in the question. You're going to mention it over there that For applying these reliefs, these additional data is not available in the question, which should be available. So we are assuming that these information are holding true for the organization. Hence, we are going to provide the relief. Okay, so you're going to write these points and make examiner aware that you are aware of the fact that these information is missing. For example, the sale of commercial building, okay, and realizing that we need to know whether an option to tax the building had been made or not, because then only we would be able to determine the correct VAT amount. So if that is not given, you'll mention it over there. So in your professional paper, you just don't have to use what the information is given to in the question, but you also have to analyze the information which is not there, and you have to highlight it to the exam. But understand, it is not that every information is incomplete or every information is wrong. Only some portions would be like that. So as we progress in the syllabus, we will also learn to identify that and to understand how we can, make out which information is complete and which is incomplete. Okay? And which is wrong and which is right. Okay, let's see one more question. You could see a question where a friend of a client tells them something they believe to be true, and the client relays this to you. You will need to ascertain whether the friend's advice is correct, and if necessary, politely explain why the friend is wrong and give the client the correct information. So you have to do this work also. Okay? This is all covered in skepticism. But there is one point that, like I said, even ACCA guides on it. Don't be skeptical about everything. You will have only 1, 2, 3, a maximum 4 issues. It's around like 4 to 5 issues only will be there in the exam entirely, which will have these angles of skepticism. Otherwise, your all paper will generally be clear to you. It will all be information given to you. So when you read the question, okay, now only, whenever you are reading the question, you should have a habit of using highlighter. On the screen, you have highlighters available wherein you can highlight the information which is reliable, which is correct, and which you can use for the question, and the information which you think is incomplete, non-reliable, or should be avoided. These highlighting skills you should develop from day. We will also use highlighting in the exam, in the question, in the class, okay, at some places. Okay, so like I said, now we will have to apply professional skills for answering. There is one question that we can cover to identify, basically to understand how to apply this skepticism skill. So let me take that question. That would make things pretty much more clearer to you how we apply this skepticism concept. Okay, so I think we can take it now before we begin with the next chapter. Let's have this Opus Limited Group question. Binny Limited is a member of the Opus Limited Group of companies. All of the companies in the group, including Binny Limited, have always paid corporation tax by installments. Okay, so I will do one thing. We'll take this question later when we do corporation tax. Okay, because even if I do it and I tell you the correct ways, you may not be able to relate to it because we have not covered corporation taxes. So let's keep it on hold. In the meantime, we have so many other questions also coming up in different chapters. Okay, so let's keep it on hold. Let's begin with chapter 3. Any questions? Please put it in the chat box. Again, this chapter, pensions, particularly pensions, is carry forwarded from your tax knowledge only. Few additional points and it is carry forwarded. The other tax efficient investment products is new in your syllabus. Just to make me clear about it, I just want to know how many of you have done with F6 in skills. I mean, the ones who have not got exemption. How many of you are done with this F6 in skills? So you're only Drumil. So I'll take up the basics of pensions then. So we'll be looking at pensions in this chapter, EIS schemes, seed enterprise investment schemes, and venture capital trust. Okay. I will just take you to the basics of this chapter. Just give me a minute. I'll be there. Just 1 minute. Okay. Yeah. So Akash has asked me a question, ma'am. Do we have in UK tax also the concept like previous year assessment year? No. That is why I've not used these terms while we were doing questions. In UK taxes, we just have one thing, that is tax year. So everything is in relation to the tax year. 1 year from the end of tax year, 6 months from the end of tax previous year and assessment year. There is absolutely no relation between the Indian taxes and the UK taxes. So when we're doing UK taxes, wipe out your brain for Indian taxes. Okay? In UK taxes, what we have covered so far is what you need to know right now, that your taxability period or the tax year is starting from 6th April and ends on the 5th April of the next year. Clear? There are though other concepts like residential status and all, which I would be sharing the notes they're covering over there. Okay, so if you just want to have a look at that, because in the personal tax planning, when we go and cover, we'll be looking at them also. Okay, we'll be like brushing up on them. Clear, Akash? And the administration part, when we will go in that chapter, we'll have a certain idea of the UK tax administration also. Fine. Okay. So the first thing that we are discussing is perfect, wonderful, Twinkle. Correct, absolutely. Very good. On a quick note, as Twinkle asked me, so that reminds me that I can also ask you a small question. For the tax year 21-22, please tell me what would be the starting and the ending dates. 21-22. Type it in the chat box, guys. For tax year 21-22, what is the starting and the ending date? Wonderful. Yes, Akash. Twinkle, correct. Wonderful. No issues. Perfect, all of you. An interesting question by Twinkle. Ma'am, how to target rank in ATX? So let's discuss about it. Okay, Twinkle has asked me a very interesting question. Ma'am, how to target rank in ATX? And the best way to answer is number one, understanding that you have while live in the class, clearing of your doubts while live in the class. They are essential for you to target ranks, because I really don't want my students to just target passing marks. You have to target rank in the exam. And is it difficult to get a rank in ATX? It is not. Trust me. Because it is not a complete theory paper, and narratives also that you're writing is just an explanation of the thing that you know in practicals. So it is not too great, too difficult paper to clear. There is a difficulty level for sure, because of course, ultimately it's a professional paper. But getting a rank is not difficult. For that, please attend the sessions regularly. Do the homeworks regularly that I give you. You have to be, regular studies are important. It doesn't matter how many hours in a day that you're studying. It matters every day you're studying or not. Every day you should study. I give you homework questions. Apart from this also, if you want, you have a lot of other sources to do questions from, like ACCA Study Hub. Like you have your, in the global, ACCA Global, you have study support resources. And in the book also, I may not be able to give you 100% of the book in homework, right? So I'll give you pick and choose some questions. You may just do other questions. Send your answers to me for evaluation, because in your professional level, writing skills are very important. You must have also understood it by reading, going through the first skills only, skepticism, right? So that is highly essential. So that I believe would be done when you send me your answers. Okay, and make sure that you're understanding the concepts well, because slowly and gradually, right now we're on the third chapter. Gradually as we move forward, we will be combining the concepts of different chapters and applying them in a question. So memorizing skill is very, very important also. Okay, study it along with the class, revise it, don't delay it, don't keep it pending. Don't rely on recordings only to do the questions. If it is possible for you, please be regular in your sessions. And only when it is urgent, then only, don't attend the session. Otherwise, it's highly essential. Let's see, even with me for the last 7-8 years that I'm teaching, okay, 8 years approximately, I have seen it as my experience. The students who are regular in the classes, they always have very good passing. I'll not say passing, but they have very good chances of getting a rank. And generally, in every term, we have a rank. So the main reason is, well, if you're studying regularly, nobody can stop you from ranks. Applies to everyone in the class, right? So I hope you will inculcate that habit in you from today only. If you have not started from yesterday, have it from today only. Get your books as early as possible, people. Okay, get them early. Fine, Twinkle? Good. Okay, now please concentrate on this chapter, on this portion, which is pension scheme. Let me first tell you about what is pension scheme. So in UK, it is not just the government employees who get the pensions. Okay, it is private employees also who get pensions when they retire. So we are here discussing about two things. Number one, the pension contributions that we make during the employment or during the period when you have not retired, and the pension contributions that we are making and the pension amounts that we will receive at the time of retirement. Okay, these are two things that we have to cover. Let's come on the first point. The first point, that is about the contributions. Suppose I'm an employee. If I'm an employee, I can contribute to the pension schemes through my employer, where my employer will deduct a portion, a percentage of my salary as a pension contribution and pay me the net salary. Other than that, also, if individually I want to contribute on my own to some personal pension schemes, I can do that. So even an employee can have an occupational pension scheme as well as personal pension scheme. Can have multiple schemes. There is no limit on the schemes that you want to have. There is no limit on the amount that you want to contribute to pension funds. Limits will only come in when it talks about taxability and tax saving. That will the entire amount that we contribute to pension funds, will it be eligible to give me tax savings? Or will there be any charges also created? Remember when we did the competition chart, that time there was one line item that said annual allowance charge on pension. So we'll be covering that here. Okay. I hope basic we are clear that we can contribute pensions at two places. And either under an occupational pension scheme or under personal pension schemes. An employee can, however, do both. There is no problem. Okay. Let's look at few points. Now, this is just a recap of your taxes, okay? So, therefore, it is presented in this flow chart. Employers must automatically enroll employees into workplace pension, and both must contribute to the scheme. In your exams, you're not required to do this calculation that on the salary, what is the percentage of employee, what is the percentage of employee. No, this is not needed. Okay, that information will be given to you. You need to apply it for taxes. That's all. Employees can opt out and set up personal pension provision also. Self-employed and non-workers can set up a personal pension too as well. Employees can do both also. And they can opt out also. If they don't want to continue with the occupational pension, they can opt out also. That privilege is also there for the employees. Okay, but if an employee is not opted out, then by default, he's counted in the occupational pension scheme. I hope this is clear. Guys, wherever you face any kind of query in any level of understanding, whatever points we are covering, stop me there. I'll explain you there. Okay, don't carry doubts with you. Now let's go ahead. If I'm talking about the workplace or the occupational pension that we say, how can you claim the tax relief? Tax relief will be claimed by deducting the contribution in employment income calculation. What does it mean? We calculate, no, that is the next chapter we'll be covering, where we calculate employment income. So you pay taxes on employment income. You have seen in the performer, we add employment income. But the employment income that we add is after pension contributions. So this is the tax relief. Because suppose my employment income is 1,000, pension contribution is 50. So I will pay taxes on 950. I will not pay taxes on 1,000. So this is the tax relief offered, number one. When I talk about personal pension scheme, you know that at the time of contribution, we get a tax relief of 20%, right? Tax relief as paid net 20% tax and by extending the bands by gross contribution. You know that? So first relief is that when you're contributing to the pension schemes, you only pay net 80%. You're not paying 20%. So that relief is given to you. And when we extend the rate band, we extend it by the gross amount. So you're getting a benefit over there, right? You are paying 80 pounds only. But when you are extending rate band, it is getting extended by 100 pounds, the gross amount. Are you clear with these two portions? How we are getting the relief? Next, employer contributions that the employer is making. No, that is in the case of gifted donations. Okay, that is in the case of gifted donations. But when we are making the payments to HMR, when we are making the payments for the personal pension, we only pay 80%. Got it? I'll come to the point. Wait, I'll tell you then. So what happens is, when I'm paying to the pension schemes, I pay 80%. Okay. And when I'm contributing, instead of contributing 100, I will contribute 80. The balance 20 will be added in my, will be given to me as a tax relief. Am I getting it? Am I making it clear? So effectively, I am paying only 80. Okay, effectively, I am paying to my pension schemes only 80. 20% is a tax relief given that you don't need to pay that. We're just paying 80. And 100, I am getting as an extension of read band. Am I clear? So Twinkle, from my pocket, only 80 is going out. And I'm getting a benefit of 100. So the difference of 20 is like given to you as a tax relief. Tax relief in the form that your basic rate band gets extended, higher rate band gets extended. It's not given refund to you. Again, I repeat, so there is a personal pension scheme to which I've enrolled as a member. When I'm making payments to the pension schemes, I'm only making payment for 80%. For the pension companies, how it is beneficial, they get 20%, they get, tax benefits from HMRC. They get tax benefits from HMRC. So if you want to know from pension schemes point of view, I will give you the details. Okay, how it gets, they get the full 100%. No, HMRC is not at loss. No. I will tell you the entire thing. Just give me a minute. I will share it with you. I'm just opening one article to show you that. Yeah, share the screen. Okay, so now these are the personal pension schemes, which are, there are different types of personal pension schemes which are allowed by UK. Okay, allowed in UK. So the types of pension schemes I'm not going into. Okay, now, yes. You usually pay taxes if the savings in your pension pots go above 100% of your earnings in a year, that we will see. And for you, the annual allowance is 40,000, 60,000 a year. Okay, that amount, the thing is. Okay, anyways, I'll explain you from here only. I'll just turn it on the study text. Just a moment. just cover it here, your query. Okay, now please look here. Whether it's an occupational pension or your personal pension, what is the rule? Let me show you here. A basic rate taxpayer contributing 100 to the pension scheme would actually only have to pay 80. The additional 20 is essentially a government topper. Okay, because the employee doesn't have to pay tax on this 100 of the salary, so saves 20 of the tax. 20 is topped up by the government. Are you clear now? So just adding to this point, it is same applicable to personal pension schemes as well. So what does this mean? The employer deducts only 80% of the total contribution from employee's salary. The scheme then adds an equal amount to the basic tax relief, which it then reclaims from HMRC by the way of extending the rate band. The key point to note here is that the scheme adds this top up to the employee's contribution, whether or not the employee is earning enough to pay tax in the first place or not. So I'm repeating it. That is, when employees would pay 100 to a net pay scheme and get no tax savings. In contrast, here what they are doing in pension contributions, they are only paying 80. They're only contributing 80 to the pension schemes and 20 is contributed by the government. Am I clear now? So like I was saying the same concept to you, Twinkle, that I showed you the UK government site only, that is why. Okay, now, so if you say that HMRC is at loss, HMRC is not at loss because this is the way that, they are, even they have to contribute to the people. So it is not about loss or gain because HMRC don't function for earning profits. It is the way that they're serving to the society. So in a way that we are just contributing 80% to the pension schemes, 20% to the pension companies is given by HMRC. Am I clear? This is a part of the public welfare programs. And they also get these, they also get benefits by way of late interest charges, penalties if you don't pay on time. And if there is excess pension contribution, then they charge annual allowance charge also. So that is also adding to the taxes, right, that HMRC receive. So from one person, they may be giving them relief, but not every person enjoys relief because large portion of the taxpayers is also the higher rate taxpayers. That in fact, instead of getting relief, they in fact pay annual allowance charge. Am I clear now, Twinkle? And everyone? She had a query that why we are paying 80%, why not 100%? So how would the pension companies benefit? How would HMRC benefit? So I answered for that. Twinkle, please revert. Are you clear with this? Yes, no. In India also we have pension contribution schemes, Twinkle. In India also we have, wherein if I'm an employee of a company, I have an option to get my pensions, deducted and it is contributed to the pension funds. Okay. So in India also we have those schemes in place. But here we don't have those tax relief concepts that is there in UK. So are you now clear absolutely with this, or there's still any query? Please put up in the chat box. Clear? Great. Now, guys, I'm just taking few more portions because I know it is a bit heavy to start with your taxes, but then you have to be in regular touch with your studies now. I would always give you few notes in advance for the forthcoming topics that you can just study. It will help you, to study those forthcoming topics, right? I think it would be of great help. So I would do that. That was from F6. So that will help you cover up the basics. ATX notes only I will give you the relevant portions once we're done with the chapter. Okay, now quick note, what we have covered so far, that there can be two kinds of pension schemes that the person can enroll for. Being an employee, he will be automatically enroll for the workplace occupational pension, and otherwise as an individual self-employed, he will be enrolled for personal pension schemes. Even a person who's unemployed can also enroll for the schemes. Okay, now here the tax relief is given by deducting the contribution amount that he has done from the employment income. So he's taxed only on the net employment income. In case of personal pension, the tax relief is given that, by the way, that you are just paying 80%, and when we are getting the benefit of extending the rate band, we are adding 100% of the gross personal pension schemes. One thing, please remember, when we extend the rate band, we only extend it by the personal pension contribution gross. We don't extend it by occupational pension contribution. So don't do that error in the exam. Okay, now employer contributions will be subject to tax-free benefit for the employee, because on the employer contribution, employee doesn't have to pay anything. And to employer also, the contributions that is making towards the employee pensions will be allowed as an expense in calculating the business income of the employer. Okay, so it is tax deductible for employer also. When we calculate the trading profits of employer, there we will give a deduction for the contributions made to the pension schemes of employees. Then please understand, it is not limited, but it will count towards the annual allowance. So as we proceed, we will understand a concept called annual allowance, okay, wherein we will understand that both employer and employer contribution will be used to calculate the tapering of annual allowance. Just like PA, we did the tapering, here abatement, here also we will do the same abatement for annual allowance also. Okay, now we discussed what kind of contributions, tax relief and all is available. But if I contribute 10 lakhs or if I contribute 1 lakh to the pension schemes, will I get tax relief for all contributions I'm making? No. Now we have cappings. Now we'll talk about cappings. So it is a two-step capping. First step capping is, number one, we will calculate the tax relief for individuals available on the higher of, I'll take the help of these notes. So we will take the higher of 3,600 or 100% of relevant earnings. Okay, we will compare these two things. So tax relief that will be available to the individual would be higher of 3,600 or 100% of relevant earnings. What is relevant earnings? For calculating relevant earnings, we need to include three things. Calculate and add what is the income from employment of that taxpayer. With it, you will add trading income of the taxpayer, and you will also include income from furnished holiday letting. What is a furnished holiday letting? This concept I will cover when we do the property income, because there this concept is covered. Okay, I again repeat, we will first step calculate the relevant earnings of the individual. What is relevant earnings? It covers up three things: employment income of the individual, trading income of the individual, and any income from the letting of furnished holidays. Okay, so from this we call it FHL. We will combine these three incomes. 100% of these three income or 3,600, whichever is higher, would be my tax relief for the individuals. So you will say, ma'am, generally your income will be higher than 3,600. So you'll get full tax relief? No. Now go to step number 2. Now we have capping. So this was first capping where we took higher of the two, 3,600 or relevant earnings. Now let's go to step number 2. Now we will compare what is the total gross amount of the pension contributions. See, here you've got the tax relief amount, right? Get the gross amount of this tax relief amount and compare it. So we'll compare the total gross contributions by everyone in the tax year. By everyone in the tax year means if you have more employees. If I talk about individual, you just take, suppose the individual is entered into 10 schemes. Then you will take the gross amount of all 10 schemes in the year. You not take just one scheme. All 10 schemes, gross tax relievable amount. What is tax relievable? That you have calculated here. Don't worry, in the next class, I'm going to take this again. So I've created this flow chart and I would be sharing it with you. Step 1, we will do is we'll compare the tax relievable portion, which is 3,600 or 100% of relevant earnings for in a year. Every year we do it. Once we do this amount, now we will check the gross amount of this tax relievable portion from all schemes in the year. Take the gross amount. Now compare it against the annual allowance available. Every year you will get an annual allowance, which is the maximum relief you can claim. What is that amount? 40,000 for your tax year. Ideally, it is 60,000, but in your books, in your exam, we are still continuing with 40,000. So in the next year, this will get increased to 60,000. Okay, anyways, it is 40,000 annual allowance. Now you will compare this. What does this mean? That suppose if your total gross contributions are 30,000, annual allowance is 40,000, your full amount will be covered under relief. You don't have to pay any taxes on that contributions. However, if your total of contributions is more than annual allowance, then you will need to pay annual allowance charge. Income tax will be calculated on it, on the excess amount, and it will be added to your income tax liability. How it is added, how do we calculate it, we'll cover in the next session on Saturday. I'll give you a recap of all this again. But in the meantime, please cover everything that we have covered. By tomorrow, I will be sharing notes with you. Okay, and in fact, I'll be sharing notes for pensions also, which will cover this abatement of AA and everything. Okay, go through them so that we will discuss it on Saturday. You'll be in a more comfort zone. Fine, I'll stop here, but I want you all to recap till this. So with the notes, you can do the recap. Fine. Any questions and queries till this point? So I believe in the 2 sessions that we have covered, you're getting clarity, you're getting understanding, and you're getting some comfort for your ATX. Some homework questions also I'll be sharing by tomorrow. Fine? Okay. So I do hope that the sessions were good. I mean, they were understandable, both of them. And, you could understand whatever we just discussed in the class. Okay, people. Thank you so much. Let's meet again in the coming Saturday. Good night. Take care. And please study well, study hard. No issues, Twinkle. When you will study along with the topics, no, you will get that connectivity. No worries. No worries. Bye-bye. Don't worry. Along with the classes, I'll make you comfortable. Don't worry. Okay. Good night. Bye. Most welcome.